For a long time, Japan has been seen as an economic powerhouse. It's home to global giants like Toyota, Sony, and Nintendo, a country built on innovation, efficiency, and economic strength. But what if that strength is just an illusion? Japan's economy is not as strong as it seems. Growth has stagnated, debt is at record highs, and the population is shrinking faster than any other major country. But the real crisis: Japan's growing dependence on China. China is now Japan's largest trading partner, controlling key supply chains, investments, and financial markets. Japan's industries, from automobiles to electronics, are tied to Chinese manufacturing. If China pulls back, Japan's economy could collapse. The world sees Japan as an independent economic superpower, but what if that power is just an illusion? What if Japan's economy isn't just struggling, but slowly being taken over? This is the hidden crisis of Japan. Not long ago, Japan was an unstoppable economic powerhouse. Throughout the 1980s, it dominated global markets with its corporations buying up real estate, tech firms, and even Hollywood studios. Many believed Japan would surpass the US as the world's leading economy. But that never happened. Instead, Japan entered a lost decade of stagnation and never truly recovered. The problem started in the early 1990s when Japan's massive stock and real estate bubbles burst. Overnight, trillions of dollars in wealth were wiped out. Banks collapsed, businesses shut down, and economic growth slowed to a crawl. Since then, Japan's economy has barely grown. Wages have stagnated for decades, public debt has skyrocketed to over 260% of GDP, and Japan's working-age population is shrinking faster than any other major economy. With fewer workers and an aging society, the country is struggling to sustain itself. But Japan couldn't fix its problems alone. It needed a powerful economic partner, one big enough to sustain its industries and keep its economy alive. And that's when China stepped in. Over the past 2 decades, China has quietly become Japan's largest trading partner, controlling key supply chains, investments, and exports. Today, Japan's biggest companies aren't just connected to China. They depend on it to survive. But when one country holds that much influence over another, it always comes at a cost. Japan may seem like an independent economic giant, but beneath the surface, China holds more influence than most people realize. By the early 2000s, Japan's economy was desperate for growth. The country had spent a decade trying to recover from its financial collapse, but progress was slow. Domestic demand was weak, wages were stagnant, and industries struggled to compete on the global stage. That's when China emerged as Japan's economic lifeline. At the time, China's economy was booming. Its factories were producing goods faster and cheaper than ever before. For Japan, outsourcing production to China became the most cost-effective option. Instead of manufacturing everything domestically, Japanese companies shifted production to Chinese factories, relying on cheaper labor and resources. Within a few years, Japan's trade with China exploded. By 2007, China had overtaken the US as Japan's largest trading partner, a position it still holds today. Everything from automobiles to semiconductors became tied to Chinese supply chains. But this wasn't just about exports. China also became one of Japan's biggest investors. Chinese companies poured billions into Japan's real estate, technology, and financial sectors. Even Japan's massive tourism industry became dependent on Chinese visitors, who made up over 30% of all foreign travelers before the pandemic. At first, this seemed like a win-win. Japan gained access to cheaper production and a massive customer base, while China gained influence over one of its biggest economic rivals. But there was one problem. Japan's economy was becoming dangerously dependent on a country that wasn't its ally. And that dependency gave China more power than anyone realized. Japan may seem like an independent economic giant, but beneath the surface, China holds more influence than most people realize. Today, over 25% of all Japanese exports go to China, making it by far Japan's largest customer. This means Japanese companies, from automakers to electronics manufacturers, are deeply dependent on Chinese buyers. If China reduces imports or imposes restrictions, entire industries in Japan could suffer. But China's influence doesn't stop at trade. It extends deep into Japan's financial markets. Chinese investors have poured billions into Japan's real estate, banking, and technology sectors. Even Japan's stock market isn't safe. China's government-backed investment funds have gradually increased their holdings in some of Japan's largest corporations. This means that even some of Japan's most famous companies have partial Chinese ownership. And then there's manufacturing. Despite Japan's reputation for high-tech innovation, many of its biggest brands rely on Chinese factories for production. If China ever decided to limit exports of critical components, like batteries, semiconductors, or rare earth metals, Japan's industries could face a devastating supply chain crisis. For years, Japan has believed it could balance economic ties with China while maintaining its independence. But as China's control over Japanese markets quietly grows, the question isn't just how much control China has, it's how much more it will take. Japan's leaders know the risks of relying too much on China. Over the past decade, they've tried to reduce economic dependence and regain control. But breaking free from China's grip isn't so simple. One of Japan's biggest moves has been reshoring, bringing manufacturing back home. The government has poured billions into incentives for Japanese companies to move production out of China and back to Japan or other friendly nations like Vietnam and India. Major brands like Sony and Panasonic have already shifted some operations, but the process is slow and expensive. Many companies still find it cheaper to stay in China. Japan has also joined new trade alliances to diversify its economy. It was a key player in the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, aiming to reduce reliance on China by strengthening ties with other nations. But even with these efforts, China remains too big to ignore. Trade between the two nations still exceeds $300 billion annually, making a full separation nearly impossible. The biggest challenge? Supply chains. Japan still depends on China for semiconductors, rare earth metals, and key components in nearly every major industry. Cutting ties completely would be economically devastating, not just for Japan, but for the entire global market. So, despite efforts to reduce reliance, Japan is stuck in a delicate balancing act, one where pulling away too quickly could do just as much damage as staying dependent. Japan is trying to regain control, but every step away from China comes with consequences. Cutting ties too fast could cripple entire industries, but staying dependent could be even worse. Japan is at a crossroads. The country has spent decades trying to balance its economic interest with its national security. But with rising geopolitical tensions, that balance is becoming harder to maintain. On one hand, Japan can't afford to break ties with China. Their economies are too intertwined. Supply chains, trade agreements, and investments make them economically inseparable. Cutting China off would cause massive disruptions to Japan's industries and financial markets. On the other hand, dependence on China comes with serious risks. If Beijing ever weaponizes trade, Japan could face a crisis overnight. Restrictions on rare earth metals, semiconductors, or key exports could cripple Japan's most important industries. And with China's growing military power, Japan has to consider whether economic reliance could turn into political vulnerability. For now, Japan is trying to diversify its economy, strengthen alliances with countries like the US, India, and Australia, and reduce its reliance on Chinese supply chains. But the reality is clear. Japan's economic independence is no longer guaranteed. So the real question isn't just whether Japan can break free from China's influence. It's whether Japan ever truly had a choice. Japan still holds influence on the world stage, for now. But how much longer can it last? If China continues tightening its grip, Japan's future may no longer belong to Japan at all.